Ladies and gentlemen, my name is Jeremy Alexander Newsome, and I do appreciate you being here on a Saturday. That is very, very kind of you. You guys absolutely rock. So thank you so much. What I'm going to do is I'm going to get the chat pane pulled up. If you don't mind, just typing in a 1 really quick in the chat pane, just so that I can see that you guys can hear me okay, and you can see my screen okay, and all that kind of good stuff. All right, fantastic. This is good. Getting some 1s. Let me pull this down. All right, Brett, what's going on, Brett? How's it going? Type in where you are in the world right now. I'm from Nashville, Tennessee, and last night, as you all know, was St. Patrick's Day. I hope you guys had a great night. Again, phenomenally floored that so many people are here on a Saturday to learn about day trading. Nirja's here from Hong Kong. I like it. That's phenomenal. Mark, what's going on? Brian, how are you? Tony, it was a pleasure listening to your presentation on ticks. Thanks so much, man. That was incredible insights. And Renee, again, thank you so much for the opportunity, Investor Insights. I appreciate the privilege of being here. So my objective today, ladies and gentlemen, is to teach you about day trading. Now, I'm going to have about 30 minutes or so to give you as much information about day trading as I can. So what I'm going to do is I'm going to teach you 2 things today, 2 important, specific things. I'm going to teach you about a gap, and then I'm going to teach you about how to calculate risk formula. Those are the 2 things I'm going to be teaching you today. And I'm not going to be presenting from a PowerPoint. I will be using the actual active charts. We're going to talk about some trades from just Friday that we traded together. And I'm kind of help you guys figure out exactly this whole day trading thing. And just like Tony said, I agree fully. The market rewards the specialist. So if you can get really, really good at something, right? If you can get really good at one specific thing, then you can really start to master that approach. Just like, type in a 3 if anyone's familiar with American football. If you're familiar with American football, Tom Brady, right? He's the quarterback of the New England Patriots. So all Tom Brady does is throw the ball and hand the ball off, right? That's pretty much it. He doesn't have to worry about kicking the ball. He doesn't worry about tackling. He doesn't have to really worry about how strong he is necessarily. His goal and objective is to throw the ball, hand the ball off, read the defense, read the plays. But he has a specialized focus, and that is his approach, right? Just like a chef, if you're a chef, you don't necessarily have to worry about creating the advertisements for the restaurant, or you don't have to worry about taking care of the insurance bill for the restaurant. You don't have to worry about the parking lot or being a receptionist, right? You're a chef. You focus on something. So the goal and objective is to master something. So what I'm going to teach you all today, just like my friend Tony earlier was talking about, is the sentiment of the market. The sentiment of the market. The sentiment, just like my friend was mentioning, is the emotions of what people are feeling, what they're thinking, and how they're reacting to a specific situation. So if you can learn sentiment, if you can learn why people are freaking out, how they feel about something, then you can take advantage of that. Because my personal thought is that people are all the same. People have been the same for a very, very long time, right? You can approach a certain situation. So, for example, if you walk up to somebody that you've never met and you punch them in the face, how are they going to react? Right? You probably have an idea of how they're going to react, right? If you just walk up to someone and just smack them in the face, they're probably going to get a little upset at you. Okay? Or if you walk up to someone and you hand them $100,000, they're probably going to get really excited. So there are certain emotions that you can predict over long periods of time about how people are going to react to something. So we're going to be talking about that today. We're going to be discussing right now the sentiment of how people feel and how you can use that to profitably day trade equities, to approach the day trade. Now, in the next few classes in front of me, about 2 classes in front of me, you're going to experience Melissa Armo. She's going to be discussing very similar approaches to gap trading. So I'm going to try to, before you guys get to that class, I'll try to discuss the sentiment so you can kind of understand why gaps happen, and most importantly, how people feel about that. So let's get started. Brett says, I am a chef. Oh, that's cool, man. Awesome. Fantastic. So let's get this. I'll clear my screen really quick. Fantastic. All right. So I'm going to go ahead and look at, someone give me a stock, any stock, doesn't matter. Whatever stock you want, I'm going to go and give you some examples using that stock. whatever stock you want. Just whoever types in the chat pane first is going to get it. Robert's from London. Nice. I love London. One of my favorite cities in the whole world. Probably, yeah, probably my top two. I don't know what my top one is, actually. Probably London. All right, HSBC from my friend in Hong Kong. All right, so let's go look at HSBC. And let's kind of discuss this particular stock. Now, this is an interesting example because HSBC does trade on a 24-hour time frame, so it's traded globally. So you'll notice that this stock actually gaps all the time, right? You guys can see that this stock, on pretty much every single day, has a gap to it. The sentiment works the exact same, so I'll kind of discuss it right now, but then I'll go to another stock. Brett typed in Berkshire and MJ typed in Amazon, so we can look at those two next. But what I want to do is I'm going to try to make this so simple that a fourth grader can understand this. Now, the reason I'm saying a fourth grader can understand this is because every single March at Kids Month, at Real Life Trading is Kids Month. So right now, as you guys know, it is Kids Month. So I make it my objective to go to schools from across the country and teach kids the exact same thing I'm teaching you guys today. It's one of my objectives every single March. I've been doing it for years. It's a phenomenal experience. I can assure you if a fourth grader, fifth grader can learn this information, you guys can as well. All right? What we're going to discuss today is we're going to be discussing the sentiment, how people feel about a particular gap regarding day trading. So sentiment, gap, day trading. That's what we got so far. All right. Now, so that you know, I don't start off with day trading when I teach kids. I got to start off with what is a stock, just so that you're all on the same playing field. I don't teach kids day trading class 1, right? We get them up to there, but at some point it starts to happen. So sentiment, gaps, and day tradings. There are two main types of candles that people use. People use green, and then people use white. Green and red, white and black. I personally use white and black. Type in a G if you use green and red candles, and type in a W if you use white and black candles for your charting. Type in a G if you use green and red. I just want to know. Again, the more participation I get, the more I'll be able to dive in and figure out exactly what you guys are looking at. Green, G for G, and for green and red, W and B for white and black. So I personally use white and black candles. See, Mr. Lyons uses green, Brett uses green, Les uses green, another Les uses green, Robert uses green. Okay, so most of you guys use green and red. So green candles in this situation are going to equal white candles. All right. So most of you use green and red. That's totally fine. I just personally use black and white. But green and red, green is up, white is up. All right. So just kind of put down in your brain. It's the exact same, just different color. All right. Just totally different color. So thanks, guys, for sharing that information with me. I appreciate that. It's fantastic. So most of you use green and red. Wonderful. So in this situation, white is going to equal black. Or, oh, sorry, white's going to equal green. So white and green, same exact thing. So if you're looking at a white candle, if you're looking at a, let's just call it a bullish candle, there is very, very few guarantees in the stock market. But I can give you one right now. If you see a bullish candle, right, which is green or white or whatever color you want to use, it is a guaranteed 100% fact that that is a buying candle, meaning that someone, somewhere in the world, bought on that day. Somebody, somewhere. Okay, it could be Hong Kong, it could be London, it could be California, Australia, Nashville, Tennessee, Hartford, Connecticut, Illinois. Someone in the world bought on that day. It's an absolute unequivocal fact because the stock closed higher than it opened. So someone bought on that day. So if someone we know for sure, if we can just absolutely without question guarantee that someone bought on that day, ladies and gentlemen, how do you think that person feels the next day when a stock gaps higher? What do you think they do? When the stock gaps up the next day, right, so they bought the previous day and the stock gaps up, how do you think they feel? Right, they're making money. Okay, keep that in mind, they're making money. So they bought on, let's say it's a Monday, and the next Tuesday, unexpectedly, whoa, stock is up 8%. How do you think they're feeling? Yeah, they're elated, says Brett. For sure, they're excited. Okay, just one specific person. It could be anybody. They're happy. Like, man, this is exciting. I'm making money. This is great. So what do most people do when they make money, ladies and gentlemen? Unexpectedly, what do they do when they make money? They sell. They lock it in. They lock in their profits. That is a very, very common thing. When people face unexpected profits overnight, they sell. They lock in a gain, and they're excited about that. So if they sell, that gives you an idea or an expectation of what the stock will do, and you will simply be able to determine how the stock will move the next day based on their sentiment or their mentality. So the formula that I'm going to show you right now is just simply what I call, it's very easy, a retest gap. A retest gap. That is when a bullish candle gaps up the next day. It's when a white bullish candle, so it can be white, it can be green, whatever color you use for up days, is when a bullish candle gaps up the next day. You're going to get a retest. You're going to get a pullback. You're going to get a retracement. Whatever you want to call it, doesn't matter. You're going to get people selling that causes the stock to come down and then potentially bounce. You're going to get them locking in profits in the first few minutes of the day. They're going to sell, and then you get the opportunity to buy the dip, buy the bounce, buy the pullback, buy the retracement, whatever it is you want to call it. You can call it anything. But you're looking to buy that pullback. And again, this is a very, very high occurring thing, right? When a stock gaps up with a nice white candle, you very, very often get that pullback. And it's all about what time frame you want to consider in regards to how you're going to trade it. So Berkshire Hathaway was the other one that was requested. So I'm going to do Berkshire B-class shares because, well, I'm poor. Can't afford the A-class shares. All right. So let's look at a few particular examples of a white candle gapping up. So here's one right here. Here's a white candle gapping up. Here's a white candle gapping up. Here's a white candle gapping up right there. Here's a white candle gapping up right there. Here's a white candle gapping up right there. So I have 1, 2, 3, 4, 5 arrows on the screen. 5 arrows on the screen of simply a bullish candle gapping up the next day. Can anyone identify what is similar in 4 out of those 5 candles? This is going to be exciting. I'm really pumped to see if anyone can get this. 4 out of the 5 candles have a very similar similarity. Can you guys tell me what it is? You might have to read my mind here a little bit, and I will give you the answer, I promise. But 4 out of those 5 candles have what? Renee, do you know? 4 of those 5 candles have something that's very, very similar. Paul is very close. What's up, Paul? How's it going, man? Hope you're doing good. Good seeing you here. Next, Brett, you're very close. Les, you're very close. So Paul says it's a wide range. Brett said the length is bullish. Les says day 2 is up. Okay. News reports. All right, so here's the answer. The answer is a lower wick. Oh, my buddy from Hong Kong got it. Nice, yeah. It's a lower wick. 4 out of those 5 candles have a lower shadow. What in the world does that mean, Jeremy? How is that beneficial to me at all, that this has a lower wick? Well, if you've practiced a lot of candlestick analysis, what you will soon realize is wicks have to be created somehow. So if a wick is created somehow, when a stock opens, okay, so that you have an opening price, a wick is created initially by the stock doing what? Do you guys remember? Selling off. So the stock will open, it will begin to sell, and then the stock bounces, and it closes higher, and you ended up with a candle that looks like this with a lower shadow. You end with a lower shadow. So that gives you that retest opportunity. It gives you the ability to, here's the key word in all of this, you ready? To wait, or better yet, and I'm going to spell it wrong intentionally, to wait or be patient. So P-A-Y, because if you get paid to be patient in the stock market. So it tells you, it literally says, hey, you should wait, you should be patient, let the retest, let the pullback come, because it's coming. Right? It's going to happen. You just don't know when, but it's going to come. When you get a retest gap, it could be on the 5-minute chart, it could be on the daily chart, it could be on the weekly chart, but there is going to be a retest of some kind coming your way. So for example, this move right here, gap up, white candle gapping up, all-time high. This move right here, ladies and gentlemen, in purple, this is called the retest. But this is the retest on what level? The swing trade level. All right, this is the swing level. Same retest as this one right here. Look at this. Nice pullback and then a bounce. This is the swing level. I'm going to show you the day trading level in just a few moments. But if you can look at a retest gap and you can answer the question why, you can say why is that pullback going to occur, then you can simply understand the sentiment of what you should do, and that would be patient, wait for the retest, and then buy. Well, okay. So we can see that this happened on every single one of these gaps that I drew. You got some type of pullback on some level, and then you got a bounce. Every one of them. So the other one that was requested was Amazon. So let's go look at Amazon. Amazon has, oh geez, 1.5 million of these. Let's go see. This is a little bit too easy, but let's just draw a few of these. I'm going to keep it with the purple marker right here. So here's a flawless one. Here's a flawless one. This one has a lower shadow. Very nice. This one as well. Let's go look at a few more. This one, this one, this one, this one, this one, this. I mean, I could draw a few more, but that's enough for right now. So every single one of these things I'm drawing in purple, every one of these is what I refer to as a bullish retest gap. Now let's answer a question that I haven't asked yet, but I'm about to. And this is the question you guys have on all your minds right now. How do you predict these gaps are going to happen? Right, type in a 1 if you're wondering that. Well, okay, Newsome, so you're telling me that a gap, that's really cool, but how do you predict it's going to happen? That's the easy part. Right, there are scanners galore out there in the world that can show you if the stock is gapping pre-market. You can use your brokers. You can use different websites. There are numerous ways that you can determine if a stock is gapping before the market opens. I mean, we're talking about hundreds of different approaches. Les says, does it apply just as well in the gap downs? Yes, it does, Les. Yes, it does. It's the exact same thing, but in reverse. But I don't have enough time to go over all that right now. Anyway, the good news is I'm going to show you how you can access all this information for free in just a few minutes. Mr. Lee says events or news to create the gaps. Yep, sometimes you can get events, sometimes it's news related, sometimes it's just exuberant buying. Yep, great question. So these bullish retest gaps, folks, I mean, look at, I'm going to draw them with another color. Look at every single one of these. This is so sweet. Because again, if you can look in the past and you can see what something did in the past and you can figure out the answer why, that's the key. You got to answer why in the world did it do that. Then once you understand the why, you can use that to apply it in the future about how you trade this. So this example, the very first purple arrow, white candle gapping up, look at that. The very, very next day, you had a lower tail. This is the retest, that 3-day period. And look, you got another one, the very, very, 4 days later. Now, this one has no lower tail, but this is the retest right here. That's a flag pattern. This one has a lower shadow. Here's the retest on this day. And then you got a swing retest right here. This one definitely retested on that day. This one definitely retested. This one definitely retested. This one retested right here. They all retested. Almost every single one on the screen did. That's pretty sweet stuff. So again, it gives you an idea. It helps you determine when to get into the day trade. Because if you can understand the why is because people are selling. That's the why. It's really simple, actually. The previous day, people buy. So when they buy and the stock moves bullish the next day, unexpectedly, they sell, locking in a profit. Les says, how can you tell a gap and go from a gap and retrace? News, market action. It's all about the candles, Mr. Les. Great question. It's all about the candles. Stick with me in about 10 more minutes. I'll give you exactly where you can go to get all that information for free. Okay? So just hang out there with me for a second. But great question, great question. Flawless questions, in fact, guys. Keep it up. I like this. They're starting to pour in. This is good. So let's go look at another stock. I don't know. Someone give me another stock. It doesn't matter. I can do this on every stock that has any kind of volume. Any normal company, we can do this with. I have another example I'll show you. But any stock you guys want to type in, just throw it into the chat pane. That's my hold music. I wanted to create a hold music company when I was younger. TSO. All right, that was the first one typed in. Let's go check out TSO. Now this is the daily chart. So the first one caught my eye. Here's the first one that caught my eye right here, Mr. Lyons. True or false, Mr. Lyons, that is a retest gap as far as what I have described it thus far. True or false, is that a retest gap? Anyone else who wants to write in, so I was talking to Mr. Lyons, but you could talk to anybody else. True or false, is that a retest gap? Bullish candle, gapping up. Yep, that would have been a retest gap. That is true. True indeed. All right, so it's a white candle, gapping up. So that is a retest gap. And you can see that it retested that day. You can see that lower shadow. You can visually look at the opportunity that you could have taken that trade bullish. So another person, Les, wrote in ticker symbol FNSR. Let's go look at that one. So again, you guys are typing all these in, not me. So I'm just going to jot these down. We got some really good gaps in here. Try to find one. This is a totally different type of gap right here. This is a different type of gap as well. Let's look at this one right here. White candle gapping up, retest gap. Retest gap. I could probably look after, give me like 3 or 4 minutes, I can find some more. There's one right there. There's a retest gap. There's a retest gap. There's a retest gap. There's a retest gap right there. This is a flawless retest gap. That's a very, very pretty one. So again, retest. You're looking for a bullish candle, whatever color you want. Okay, bullish candle on the prior day, and you want it to gap up. So this is a fantastic example right here on FNSR. Here's what we can do. I hope this blows your mind a little bit, but we can create a plan for Monday right now on FNSR, and we can do it for a day trade. I can literally create and help you guys build right now a day trading plan on this stock over 24 hours in advance. You guys want to see how I'm going to do it? Here it goes. Keyword if. I don't know if this is going to happen, but let's say if FNSR gaps up on Monday to, let's say, here in blue, would that be a retest gap? Yes or no? What do you guys think? Robert says, not sure I understand the retest concept. The price goes back before going up again, but often goes down, way down the original gap. Correct. So again, we're going to be talking about how to day trade this, Robert. So right now, I'm going to show you just a few seconds. It's a flawless question, but I'm going to give you an understanding in just a moment of how you can actually day trade this. Because again, the retest gaps, you're right, they do get filled, and it's a great, great way to approach this for swing trades as well if you have a great idea and an understanding that's going to actually fill that gap. Just like Les, you're talking about the gap fill theory, right? So the gap fill theory, you're totally correct. So that's the bigger pictures on a swing level. I'm about to dive into the day trading just now, but again, this example in FNSR, this is a plan for Monday, okay? If a white candle gaps up tomorrow being Monday, then we could look to play this on a retest. So there are 3 things that I use to find the retest, and they're all very easy. Number 1, candlesticks. Candlestick patterns. Okay. Number 2, moving averages. Moving averages, and specifically the 10 exponential moving average. Now again, just so we're very clear, you can really use any moving average on this. It works for all of them, more or less. Since you're day trading, you want to use a quicker one. Obviously, every one of you here knows about the 8 exponential and the 10 simple, the 20 exponential and simple. You can use a small moving average, but this is going to be for day trading. And the third one's going to be time of day, TOD, time of day. So those are going to be the 3 things. Now, this is easy to learn. This is easy to learn. This is the part that takes the most work, the candlestick pattern. And unfortunately, there's no easy way around this. You do have to learn candlestick patterns if you're day trading. It's just the way it goes, but you can learn a few very basic ones. It's actually funny. Les typed in Tiffanys earlier. He wanted me to look at Tiffanys to see if this strategy works on Tiffanys. And I'm going to just copy and paste your note, Les, with a smiley face and send it to everybody so they don't think I'm making this up. Oops, I did that for Tesla. I'm sorry. 1 higher. I'm going to do it with 2 smiley faces. All right, so here's Les. He asked for Tiffanys. The reason that I'm sending it to everybody is because that's the exact stock that I wanted to look at on today's example, because that's a beautiful play, phenomenal play on Friday that we were trading together. It was just glorious. So let's go through some very, very easy basics first, okay? Basics number 1. True or false? Was this a white candle gapping up? True or false? White candle gapping up. All right, Paul says yes. Anybody else? All right, Gary says true. The answer is true. All right, it was a white candle gapping up. Yes. All right, so we got that down. That's the easy part. You figure out, is it gapping before the market opens, and you classify it. It was on earnings, correct. It was on earnings. So it was a gap over earnings. So it was a white candle gapping up. Okay, it doesn't matter how the gap gets created, as long as it gaps. That's really all you need to know. And then you're going to go in, so remember the 3 steps. You have time of day, you have moving averages, and you have candlestick patterns. Okay, so Alex says, I'm talking too much. Where's the strategy? Let's talk about it right now, Alex. Let's get there. Let's dive in. Here we go. Let's go in here to the 5-minute chart on Tiffanys, and I'm going to go back before market open, and we're going to do a little bit of an example. Okay, so here is the 5-minute chart. So if we say that there's a good chance that this is going to retest, right? Bullish candle gapping up. It helps us determine, know, and understand that we should wait and be patient. We should wait and be patient, right? So if it's going to retest, it says, hey, guys, wait, be patient. I'm ready to buy this thing, but you got to wait for the retest. That's where the time of day comes in. The time of day is the retest gap usually takes anywhere between 10 minutes and 40 minutes to form. 10 and 40, depending on the size of the gap. The bigger the gap, the longer it takes, obviously. The less size of the gap, the smaller it takes. So 10 to 40 minutes, which means usually the average for me is about 30 minutes. Now, I know you're going to hear a lot about day traders trading the first 30 minutes of the market, and that's fantastic. There's so many opportunities out there, but here's the truth. Since I'm not selling anything at all today and everything I'm going to give you guys is entirely free, I can say this very simply. The trading the first 30 minutes is more for advanced traders. It takes a while to comprehend and to fully understand because it's faster, more volatile, the bid-ask spreads are larger, the chances of larger slippage is huge. The chances of missing trades are big. You got to be a lot quicker. So if you're newer to day trading, there's zero chance I would tell you to trade the first 30 minutes because you will likely lose money. Okay, you're going to get rushed. You're going to get scared. You're not going to know what to do. So wait for 30 minutes. 30 minutes is not that long. In fact, if you want to sleep in a little bit, you could sleep in until market open, 9:30 Eastern, and then go start pulling up some gaps, see which ones to retest, and start waiting 30 minutes. Okay? So the retest gap, wait, be patient. How long? 30 minutes. Got it. All right, we've nailed strategy part number 1. Part number 2, Alex, do you remember since you're asking? So we have time of day. That's the 30-minute part. Wait 30 minutes. Number 2 was the moving averages. So I'm going to go ahead and pull up the 10 exponential moving average and the 20 exponential moving average. So let me go ahead and do that now. I wonder how that's going to impact my charting. Okay, perfect. Those are going to be the 10 and the 20. So now we have 5-minute candles. We have the 10 and the 20 pulled up. I got 6 more minutes to show you guys this. I'm going to go a little bit quicker. So we got 5 minutes, 10 minutes, 15 minutes. What is it doing, ladies and gentlemen? It is pulling back. It is retesting. This is the price action of people selling. This is a visual understanding and representation of exactly what I said earlier, but on a 5-minute chart. This is the day trading world right here. So this is those humans selling and locking in their profits. Everyone who bought yesterday. This is them selling. Les, is it the 8 and the 20? Okay, yep, that's also fine. All right, so we got 15 minutes in. Okay, here's 20, 25, 30. 5, 10, 15, yep, 30 minutes. So now, notice this red line and this blue line. The red line is the 10 exponential, and the blue line is the 20 exponential. So what are we doing here now? This is the most important part of getting into the trade. Now you have to wait for the candlestick reversal pattern. The candlestick reversal pattern, something that's showing you this is going to go bullish. So 30 minutes into it, here's a white candle, and you're thinking to yourself, all right, step number 1, we're bouncing. You almost have a perfect tweezer bottom. So these 2 candles almost have the exact same low. And your next candle, check that out. Your next candle, good high wave candle. What pattern do these 3 candles create, ladies and gentlemen? What pattern do these 3 candles create? This will be a great test to see how much you guys know about candlesticks, because this is a massively important aspect to day trading. And again, in just 4 to 5 minutes, I'll show you guys all where to get this information entirely 100% for free. No sales pitch, nothing to sign up for. You guys can get it right now and start accessing it. This is a morning star reversal. MSR, morning star reversal. All right? Morning star reversal, there could be some other names for it, but that's really the most popular one. So now let's talk about where you're going to get into the trade. Where do you get into the trade? Well, you're going to be getting into the trade above the high of the bullish candle. And where are you going to place your stop? You're going to place your stop below the lows of the moving averages, obviously. You're going to place your stop where everyone else will place their stop, right here. So now what you do, this is really the most important part of the entire discussion, is me talking about how to mitigate your risk. And I know I'm going through a lot of information, but it's a little bit of a challenge to teach someone how to day trade fully in just 45 minutes. So let's talk about this. The price that you're getting in at, 91.70. Okay, that's the green line. That's the price of the green line. The price of the red line is 91.10. So what we're going to do is we're going to calculate how much we're willing to lose on this particular trade. You've all heard the term, you should never risk more than 2% of your account on any one given trade. So let's just say that you have a $40,000 account that you want to trade with. Let's do 1% of $40,000. How much is that? How much is 1% of 40,000? 400, right? 1% of 40,000 is 400. So that's how much you're going to risk on this trade and every trade. So once you have that risk, you then do some math. This is first grade math. Subtract the two numbers. Subtract your entry, 91.70, minus your stop, 91.10. You're going to get a number. How much is that, Brett? That is 60 cents. Folks, this is a mind-blowing formula. I promise this is going to change the game for you guys forever on how you day trade. Very easy. Second grade math. Every one of you can learn this. You take your risk and you divide it by your stop value. $400 divided by 60 cents equals how many shares you would trade. In this example, it will be 666. Let's just round up to 667. That's how many shares that you would actually buy on this trade. That's how many shares you would buy on this trade. What that does is it creates a very comfortable amount so that you know exactly how much you are willing to lose on this particular position. 400 bucks, that's not your investment amount, that's how much you're going to lose if the trade does not work. And so that you all know, the trade did work very nicely. Retest gap on Tiffanys. We played it on Friday. So here's the deal, folks. Unfortunately, we have some jam-packed sessions. We have a lot of great traders coming up. Type in a 1 if you would just like to get all this information for free. Every single thing I just talked about, all for free. It's not going to cost you one dime, not one single cent. You don't have to give me anything information. Real life trading, I created a company about 3 years ago that teaches people how to day trade, swing trade. I teach people how to do everything from free. It doesn't matter if you're 9 or 99. Right? I remember March is Kids Month at Real Life Trading. So I go to middle schools, high schools, elementary schools. I teach kids about what the stock market is, what investing is, what day trading is, how the stocks work, how risk works. I teach people from all over the world all of this entirely for free. Why, you might ask? Because I make money trading and I like to teach. So go to reallifetrading.com, click on classes, click on day trading. If you want to learn how to day trade, everything is there for free in 4 classes. Seriously, try it right now. It's not going to cost you anything. Go to day trading, boom, it's all right here. Everything is right there. Go to classes, you can click on swing trading, intermediate trading. If you want to learn about candlesticks, here's a free ebook. If you want to learn about how to day trade at only $3,000, you can learn about that. 4 types of gaps. It's all free, all on my website. Any questions, any concerns, anything you guys have for me? I'll type in real life trading. We'll click on the day trading. I'll just put this into the chat pane. reallifetrading.com/day trading, and I think you guys are going to be awesome. Les says you speak Spanish too. Actually, I hired a translator to teach everything that I taught for free. I teach them in Spanish, yes. So I hired a translator. We also have Spanish and French Canadian. I'm working on Russian. I'm working on Mandarin. So working on that right now. Doug says, thanks, Jeremy. Yeah, my pleasure, dude. Brett, you're welcome. Todd, I posted the chat in there. Paul says, what is the minimum that you would recommend that is required to trade shares? The minimum, $3,000. The minimum, $3,000, because I can teach you how to leverage other people's money with only $3,000. So if you want to trade stock, it's going to be about $3K. MJ says, what is the biggest single reason people fail at trading? Lack of discipline. That's the #1 reason. They do not have a plan, and if they do have a plan, they do not follow it. That's pretty much why. Brett says, habla español. Sí, un poquito. Robert says, do you do one-to-one mentoring? Yes. Email me, jeremy@reallifetrading.com. Be happy to help you with that. Any other questions, ladies and gentlemen? So again, there's a jam-packed information here. I wanted to make sure that I did my session as quickly as I could to ensure the next presenter has their opportunity and their time in front of them to rock out as well. Again, guys, thank you so much for being here on a Saturday. I hope I woke you up a little bit. I hope I excited you again about day trading equities. And again, this is a no-holds-barred information. I'm going to teach you everything that you need to know for free. So now, if you want to learn it, you have no excuses not to. Umar says, what platform do you recommend? What about algos and the whole process? Check out these classes, Umar, and I'll give you all that information. I recommend Interactive Brokers and algorithms. They're great, but you can still make money even with algorithms. That's fine. Les says, thanks for a great webinar. My pleasure. You're welcome. Renee, you're absolutely fantastic. Go Gators. Thanks so much for being here, Renee. You're incredible. Ladies and gentlemen, I had an absolute pleasure with you today. Have a great rest of your weekend. If you need anything, let me know. You rock. Have a fantastic day. And until next time, ladies and gentlemen, love life, live life, and trade it. I'll see you later. Bye.